Good morning, traders. It's 8:03 a.m. Chicago time on the 14th of July, 2022. It is Thursday. The weekend's almost here. It is summer here in the upper uh, hemisphere. Um, this is episode number 2272. And I want to remind you that derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. And we have the wrong screen here. Let's move to a different source. What is going on? Um, Interesting. This thing is not allowing me to choose the right source. Very cool. So we have a technical issue here. Let me just try something else. 1 second. Okay. Yeah, this is kind of annoying. It's kind of annoying, guys. Let's try this. Apologize for this. Out of my control, really. There we go. Okay, just to keep you all guessing, I guess, and keep me guessing about what's going to show up on the Trader Byte screen this morning. This is the Convergent Trading pre-market summary sheet. We see that risk-off sentiment is dominant this morning. The market has sold off from the 3803 in the S&P where it settled yesterday and is now trading at 3756 top of the page, top left of the page, down almost 50 points or 1.28%. The Dow off almost 500 points. The Dow got as low as 3241. So well beyond 500 points down. The NASDAQ down 94 points or 0.8%. It's holding up pretty well. I want to remind you that this morning JP Morgan reported. JP Morgan came in at $2.76 versus $2.91, missing its earnings by 5%. Also missing its estimated revenue by 1%. Jamie Dimon has been releasing comments all morning. Other news, Taiwan Semiconductor also came out with its reports. It stated that it is reducing spending, which has not happened for chip makers in a long time. They said they're seeing softening in the the smartphone-based platforms and other areas, which is in line with what Micron said just about 2 weeks ago. U.S. PPI came in higher than expected. Core PPI came in line, and initial claims came in higher. For the rest of the day here, we're looking at Fed's Waller at 11 a.m. We're looking for the house price index year on year for June in China at 9:30 p.m. GDP growth rate, a very, very big number. The prior's 4.8 year on year Q2, 4.8, and the forecast is 1.1. Quite incredible, right? Huge hit from those COVID shutdowns. Industrial production is expected to come out at 3.1, the prior 0.7. So pay attention to those if you are trading the Asian session. Turning our attention to the S&P, middle of the page here. The auction condition for the S&P is multi-distribution. The S&P is in a double distribution profile currently. 304 contracts have traded so far. 97% of the inventory short. We've got 64.25 points of range, expecting a pretty active session. We've seen crude get hit this morning from a high of approximately 97. Actually, the high this morning was 97. It was trading a little bit higher yesterday to a low of 93 and a quarter. It's currently trading at 94.05. Crude getting hit a little bit. Copper's also down. Copper just really going back to its origins. It's reverting back to its origins here in the $3 range. And gold is also getting a bit of a smackdown at 17.05. If you chart gold, you'll see that really the dollar strength is taking a lot of air out of that metal. Silver, same thing, off 4 points. Silver is an industrial as well as a precious metal. And that's where we are. The point of control, the overnight point of control, remember yesterday it was 37.60 was a wall. 37.60 this morning was a bit of a ceiling on the CPI. There was a trade there that I posted in a Conversion Trading head trader channel. It was a short against the 60, but it was too fast for me to catch. Still paying attention in the S&P. Let's switch to the charts here. So here's your CPI. I got to stop that mouth clicking, right? Here's your CPI release. Just phenomenal range there, 124 points, 121 points, something like that this morning. And then yesterday we settled right in here. Okay, this line is a settlement for yesterday. And then this morning we fell off immediately into the 75. Very well orchestrated there. And then it goes right back to the 38.04. The stock zone pre-existed the settlement. The stock zone, this gray band, has been there between 38.04 and 38.09. It was at 38.06 yesterday. And then it falls back through, pulls back to the 37.90 stock zone, and then goes to 37.75. And of course, we expect the break. And here comes this impulse move. To me, this looks like a technical drop, not a news-based drop. It's a kind of a classic setup there with a flush of the longs, a squeeze of the longs. And so it pulls down and through, and it pushes to the 37.60. So we go into the 37.60 from yesterday. Remember, here it is, 37.60 wall right there. We go into the 37.60. We chop around. We pull back, not to the 37.75. It's they're overzealous this morning. They get ahead of the 37.75 at 37.70, and then they drop into the 37.50. And basically, we've chopped around the 37.50 for most of the morning, and we are here yet again. 37.50 representing the mid-century figure, an important measure. Dang it. So I need screen 2. All right. Let me just fix this 1 second. This update on the software is just garbage. 1 second. Here it is. You can slow me down, but you cannot beat me. All right. So we pull back to the 70, and then what we have here is they really fudged this up, this update. The 70. And then we have a consolidation here at the 50. We're trading around the 37.50 currently. What I was watching on the push higher, the key level that I'm watching is the 75. Of course, 75 representing the MC point of control and many, many, many things for the last month to 5 weeks in confluence with the full session mid. VWAP has dropped, but VWAP was right there at the 37.75. I would have loved to have seen it poke or splash up on the PPI to that price. I would have sold that price, and now it's near lows. So we're moving towards the attack on. ¿Qué pasó? Here, let's move to this chart. We are on the attack towards those lows at the 41.50 and 42. This is what this looks like. Yesterday, the action yesterday was pretty much as expected. Here's what was expected yesterday. Remember, we were opening at 37.64. Looked like during the trader bite, and I said look for responsive and look to sell somewhere in this in that stock zone, the 38.06 yesterday. And if you monitored this thing, it didn't behave very well at the lower end of the prior day's range. So yesterday it just could not it could not hold the low, which is a low from back here, and the prior session. So I expected some resistance in the 38.06 to 38.10, and what it did yesterday is it splashed right through the 38.06, and it went into the range and stalled out at 38.10, and then it ultimately gapped to settle. It had a gap to settle trade. It opened at 65.50 and it went all the way into 23.75, tagged the 23.75 to the tick, and then fell off and then put in a lower high and came back off, and it just consolidated around that 3800 area. That's what yesterday did. So it did end up having a responsive buying spree, which was expected based on the balance that's in the box here and what we talked about. These balance areas that we've had, the expectation is now that we've tested balance from above, it's expected to revert back, and it did that. So back to our Edge Pro X. Let's see if the intraday fixed itself. Yes, it did. Okay, so now we are again battling for these lows. So what we did is we breached the low in the overnight session, that first low, last week's low. So we had an inside week last week, and then now this evening we breached last week's inside week, and so we have extended the low down. To me, this has a significant downward bias draft or push. The overnight low at 37.42, last week's low at 37.44. And to me, I'm still bearish, and I've been bearish, if you recall, since way up here. The way this closed last week told me that this is exhausted. Why is it exhausted? I'd have to send you back to Monday morning's video, and what we saw last Friday is a market that put in a higher low. If you recall me talking about this, a higher low, higher high, but value did not move at all. The point of control was overlapping at 39.06, I think is the number. And so this, you see that pink line right there overlapping this pink line? It means that the buyers are making a lot of effort and they're being confronted or they're being rebuffed by sellers. And to me, the buyers are just exhausted at that point. If buyers are exhausted, the natural thing for the auction to do, which I want to remind you, we don't trade the market, we trade the auction. The market is an auction. If buyers are exhausted, the main thing that happens is that it either sits and accumulates more buyers and then breaks higher, in which case you get a flag, you get a bull flag and a break. But more likely in this kind of situation, you turn over and at least have a small pullback or a partial pullback, the pullback area being 38.40 right back to the top of the balance zone. And with CPI and so on, that's kind of been disrupted. So we've fallen into the next balance zone. And here we are back at the balance zone's most traded or most valuable price at 37.75. And then this morning we gave that up. So that's where we started yesterday. This morning we gave that up, and we had poked yesterday, last week's low. Again, still looking bearish. So this is. I know there's a lot here to digest, but you got to keep an eye on the big picture. What we have is lower highs, lower highs, lower highs. The daily trend is down, and we are looking like we're starting to establish a weekly one-time framing down trend, depending on what we do tomorrow. Not very likely that it would breach the high or anything like that. So to me, it looks like the daily has turned down. So the daily is in a one time frame down. And then depending on what we do today, if we take out this 37.42 area, we may very well be, or the 37.44 in a day session, we may be in one-time framing down on the weekly. This is likely to carry us down into the 36.75. That's what's expected. For that to be negated, for that idea to go away, we need to turn back around and get above 38.34.75. We need to end the one-time framing down, and then we need to clear this 38.40 and start moving into the upper distribution. That's what would negate that. So currently on a swing basis, 36.75 is the higher probability. Okay, so that's what I'd like you to walk away with. That's key. Again, we went over what it has done in the overnight session, and the over-under line currently is right here at the 75, which is a prominent level. We've kept putting in lower highs. We've got a weakish low, which we put in on PPI. We flashed down, pushed up, and we're holding sideways. We've got a double distribution profile in the overnight session, and we have a dislocation between the mid VWAP and the overnight point of control. So any push towards that VWAP at 69.70 and the mid at 75, I'm going to look to sell early on. If it gets above the 75, pulls back, consolidates, puts in a higher low, or continues, and it looks like it just won't fall below the 37.75, 37.70, then what is the target? Then what's the trade in that situation? Remember, we're trading basically below yesterday's low, so we are gapping lower. If we hold the 75, what do we target next? What do you think? Come on, quickly. I'm about to shut this down. No answers? Or are you guys delayed? You're going to target the gap to settle. The gap to settle, 38.0450. So the trade above the 70-75 area is to buy a pullback somewhere in the 70-75 preferably, and then you're looking for the gap to settle. So 38.04 target, initial target to test yesterday's settlement. If it pushes through yesterday's settlement, then we're looking for the overnight high to be taken out at 38.06, which is right there in that area. And then we're back to yesterday's balance, right? So yesterday's point of control, 38.08. So you have the 3800 century figure. You have the 38.0450 prior settle. Then you have the 38.06 quarter overnight high. And then you have yesterday's point of control, which is the balance price for the session. So this is going to be the big magnet if we get above 37.75. Why am I telling you this? I'm telling you this so that you don't sit there and put on a trade and then watch it kind of tick against you and go back and forth, and then you just get anxious and then take 4 ticks on that trade. I'm to tell you to have a bigger reason, a higher powered reason for why you would hold, so that you're not the weak hand in the market getting shaken out every time the market kind of moves against you. Put on your trade with a reasonable stop, with a calculated stop. It needs to make sense mathematically and structurally and for your account size. And then now you know 3,800. Let me see what it does at 3,800. That gives you 25 points of range. That's 25 to 30 points of range. If it gets to the 3,800 and comes right back to 75, I've given this trade everything it's got. Yes, I've left 25 points on the table, but that's why I scale out. If it comes all the way back, I've given it everything this trade has got. If it goes to 3,800, pulls back 37.90 stock zone, holds, and then starts to attack the 3,800, hold on tight, because the gap, the settlement becomes the internal gap, and then you would want it to fill there. So that would be the most important scale out area would be 3804.50. Then you have the overnight stat, which would be at 3806.25 if it moves up. To the downside is just 37.42. You have the overnight stat, which is a high probability, 97% historical probability that it would take that out. So that's another good reason to hold. And then if it's going that high, it's likely to seek balance, and the balance is at 38.08. Do you see how this works? This is the mind of a professional trader and how you're thinking. This is how you're thinking. You're looking at a much bigger field rather than looking at your jigsaw type of book map, kind of so zoomed in. Those tools are fantastic for entry and execution, but you have to expand into your bigger charts to understand the lay of the land. That's the bull scenario. Okay, that's the responsive buying scenario. If this thing cannot buy off the open, then 37.42 is likely to be taken for the overnight stat. Then you're left with, because we've taken out last week's low at 44, you're left with that 41.50, and this thing can run then, this thing can run into, what did I say? It can run right through the 42 down here, and now you're in this zone. You're in this little gap zone, and you're in this double top. What is the price? 37.12. 37.1175 is a double top. Call it 37.12. So if it does fall through and it splashes through the low at 42, you've got 41.50. If it takes out the 41.50, you're looking to sell pullbacks, and your target is 30 points away at 37.12. Those are real trades. That let me get in because it went too far so I can grab a few ticks. Those aren't real trades. That's just chump change, and it's not lasting. And that's what I want you to take away from the Trader Bite every morning, is we're looking at this landscape, and I'm spending a lot of time on it because I want you to have a stronger hand in the market. Okay? Good luck. So we are one time framing down, and if we don't respond this morning with some buying, the longs are going to get screwed this morning. Good luck.